Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 26th of October, 2020. Well, tonight we should have a brand new Supreme Court justice, the way things are going. We saw a big correction in the stock market today, and we're getting a bit of a bounce today. You know, one of the rules that I learned as I went on with my career is big down days on a Monday often lead to an attempt at a reversal day on a Tuesday, or a big up day on a Monday, a reversal. It doesn't work that way the other days of the week. That seems to be the most popular, and I see it often happen in the stock indices. Where are we? As of tomorrow, we're 7 days away from the election. Where are we? Well, with COVID relief bill, you don't have a COVID relief bill, and you're not going to have one passed and agreed to until this election's over. Why would the Senate agree to anything right now? They're leaving. They got to finish their campaigning. Why would you give in to anything now? The two houses don't get along with each other. Why would you give in? The Trump administration can agree till they're blue in the face. I think Congress isn't going to agree, and I think Mr. McConnell knows that, and I think the president probably realizes it too. Let's see who wins. When will that be? That's the other question. COVID, what do you do with this? It's exploding in the amount of cases in the United States and in Europe. This is not good. Texas hospitals being overrun already. Wasn't this supposed to happen now? Yeah, but we were supposed to have dropped off first, and we didn't. So when we look at the S&P, this market's had a real problem in getting over 3504.5. My guess is, just a guess, it might want to wait for the Santa Claus rally. Do I think it'll happen? I don't have reasons not to believe it. It almost doesn't matter who wins an election. The results afterwards are that Santa Claus rally often takes place, and that's what I still believe is going to happen. When I look at the chart pattern, well, we're still in the inverted head and shoulder. We're playing along what we call right here. This line, this is your shoulder, your next, you'll have this line is going to be the key. You'd have to break through all this to be bad, and I don't think that you're going to. I think you're just waiting to see what the market wants to do. But that's what I think. What does the chart say? Now we get into chart analysis. The pattern is one of lower highs and lower lows. That is bearish. It's been that way. You didn't even need today to have it. That's what you've been. Next, where's the market in terms of moving averages? Well, coming into today, you hadn't been able to close under the 18-day average of closes. In order to activate a bear signal in a market, you could have the swing line down, but the filter on the swing line is price in relation to the 18-day average. You hadn't closed under it, so the bias stayed up, and that's how I define bias. With the close today, the bias is down. So now what that gives is on rallies, the bears control to sell, in my opinion, against, if they want to, this 34.3550, the line in the sand, that 18-day average. You wouldn't want to see the market over 34.62.5 if you're going to keep the pattern of lower highs, lower lows, which is bearish. Where is our momentum? Well, we'll get to that. We're going to first look at the Bollinger Band. You didn't hit it. Bollinger Bands have a unique way of stopping markets in their track, especially when the bands are wider, not real narrow together. I don't have a situation here where they were real narrow, so I can't show you that. But at times you'll get that, and when you do, I call it a pipe, and the market just moving sideways in there, waiting for a breakout one way or the other to create a trend. So right now, I think going home, the market's got downside momentum that is not in oversold territory. To be oversold, the reading has to be under 30. It's not. Therefore, I see the market in a downtrend, downside bias, momentum down. I think the bears will defend their position at 34.35, and at 34.62.75, the game's over on the bear side, but it does not start a bull trend. The most you could do is have a lower low and a higher high. The bears have control right now. NASDAQ, same thing with an added kicker. First, you're oversold. Danger all the time. Second, The resistance is the 18-day average, and you have an outside day down. You'd have a good indication there's a market that got too far ahead of itself if this were to take out 11,695.50. Why? One of my rules of thumb, it's a rule of thumb, it doesn't mean it's going to work all the time by any stretch, is if you take out the high of an outside day down within 2 trading sessions, it often leads to price making a run to the closest moving average above it or a Bollinger Band, the closest one. Well, in this case, it would be the upper Bollinger Band back at 12,135. I'm certainly not saying it's going to happen, but it's certainly a rule of thumb I pay close attention to. The fact that you're oversold tells me on rallies you probably aren't going to track the big short, the people that want to be short. It's already too oversold. You're oversold in the Dow. What number did you hit today? The lower band. What do I say here? Over and over. I think the smart, quote unquote, smart money takes money off the first time you hit a Bollinger Band. 95% of the time you will trade within the Bollinger Bands. So when you get a market that hits it and it starts now, it's oversold, what are you hanging around for? That doesn't mean it can't go lower, but since it's hit that and it's already oversold, you've sort of used up a lot of gas in your tank to have another pit stop and fill it up. Yes, I watched F1. Lewis Hamilton, greatest driver of all time. In the Russell, market lower highs, lower lows, right into the 18-day average. Trend down now. Yeah, it went that fast. It exhausted itself, getting up into the Bollinger Band, moved sideways. We talked about the Gorilla Glue trade. Then it started moving sideways on it and finally broke down. Right back here when you lost the embedded reading. The goal was the 18-day average. You hit it, and now you've actually turned into a downtrend in the short term. Unlike the other 2 markets we just spoke about, this is more like the S&P. You're not oversold. I wouldn't be surprised if the pros are selling at that 1612.60 level with stops over 1641.70. That would take them out of the market. But you couldn't start an uptrend. You'd have a lower low, higher high. So I see that as still being in the bear camp. VIX cash exploded over the upper Bollinger Band. How often do you stay over a Bollinger Band? 5% of the time. Now, you've done this before. The end game is you keep coming back down. End game, you come back to that 18-day average. And no, I'm not telling you to go short. I'm saying the smart money's coming out. Very big difference in the two. In the bond market, momentum oversold. Market's been in a downtrend, hit the lower Bollinger Band. That's where I think the pros took their money off the table. And yes, in futures, understand the leverage and what it does. That leverage, you got like 85, 90% leverage. So you get to these numbers, it's not about, oh, the market's going to keep going forever. People go in and go out. These are futures trading vehicles, not investment vehicles. 10-year note, you hit the lower Bollinger Band. What do? So long. Get up to the 18-day average. Well, look, but is there any trade to be made here? None. You got a higher high, lower low. Dollar index. Interesting. The play was to come out of shorts from what I talked to you about the first challenge of a Bollinger Band there. That does not mean you have to do what I say. I don't want to run your money or anything else. I will just be consistent in saying first times you hit Bollinger Bands is often where the pros take money off the table. I'll leave it at that. You do what you want. Now, you're oversold. Why would anybody be looking to sell in an oversold condition? I'll never understand. Embedded is different than oversold. You're not there. If you take out 93.13, you could end up with a pattern of higher lows, higher highs. If you closed over 93.37.5, I'd actually get a bullish signal. That's what it would take. Bearish, not in an oversold condition. Eurocurrency, still in an uptrend, but divergence. You've got the higher low, higher high. Now, 2 days ago, You had an outside day up. What you don't want to see is this taken out of 117.99. 117.99, that's the number. Momentum down slightly, correcting an overbought condition, but it's pointing lower. Bias up, trend up. In other words, not everything's in agreement. Don't know what to do with it. Japanese yen, first challenge of a Bollinger Band. Bye-bye. I realize you're going to say, Ira, it kept running. I get it, but it pulls back. Got it? Does it always pull back? No. I wish I could tell you on charts everything's always the same. What I'm going to tell you is you're not looking to be short on a Bollinger Band to get back there. I'm assuming you're long, just for the sake, because the bias is up and price is over that. Trend in this case was up, but still, first challenge, the rest of the money got away from some traders unless they move their stops. But bang, that's the percentages playing with those Bollinger Bands. Bitcoin, bullish. Outside day today, which way? Up. Well, in fact, it's not an outside day, it's just another up day. I take that back. Do you remember what we said? What's the definition of a gorilla glue trade? The market hits that Bollinger Band every single day for more than 3 days. Still there. Embedded reading, bullish as can be. So on the breaks until you lose the embedded reading, I think the bulls are still in control. Now the differential in the Brent and WTI, this is the first time where we've gotten ourselves in a while back over this. This was Thursday, Friday, and we're continuing. So we'll have to see if this means anything, but suddenly the markets, this battleground is very, very important. Did the spread differential get to be too much? Saudi Arabia today said, through their Ministry of Energy, that they think the worst is behind energy prices. Interesting. They have good economists, so they're seeing something. In the Brent, still bearish. Will you be able to make it to the lower Bollinger Band? Maybe. Trend down. It was confirmed down today, obviously. If you take a look, this is how you were looking on the market Thursday. Friday, for the first time, we already had the lower highs, lower lows. So that was the confirmation day. And maybe you get down to that Bollinger Band. Pretty surprised. You're oversold already, so be a bit cautious. Could the market break through here? Maybe. It's going to be hard. Brent, you've got the higher high from here. This is an ugly chart pattern. And this, the WTI, this is the ugly chart. The Brent's the easier one to call. This was the harder one because of this outside day up, and then you took out the low. You're oversold. Got very close to these Bollinger Bands. Be cautious. Heating oil market still in a downtrend, even with this cold weather. Natural gas has gone up because of the cold weather. This market's still in a washout phase. Oversold. Are you exhausting? Probably. I'd be very cautious there. And look at the outside day up in the nat gas. So you get an outside day up, and I smile because now it tells me a few things. If I take out that low, either on Tuesday or Wednesday, the odds favor I'm going to go back to wherever the Bollinger Band is until it's taken out. The support's here, but I'm not trending. I happen to have, in this case, a higher high here, lower low, and divergence as momentum is pointing down, and seasonality is a bit lower at this point. So a confusing chart. But I'll tell you what I'm seeing my clients do, and something you should consider. These micro stock indices are made for this volatility. They're 1/10 the size of a normal contract, which also means instead of a $50 for each full point in an S&P, for example, it's $5. The margins, 1/10. Everything's 1/10. So you get to play the game for a lot less. It's like going to the $2 table, right, in Vegas, instead of the $25 table. Just think of what I'm saying, and everything works pretty much that way. So if you'd like to find out about this, we made it very easy. First of all, our commissions, $1 a side. If you can't beat the buck a side, why are you even doing the game? And unlike Robinhood's and other firms, people charge commissions in futures. best of my knowledge, nobody's doing them for free. So how do you find out more? Well, go to our website and /micro at the end. So it's www.iraepstein.com/micro for the micro indices. It explains everything. Get yourself going. You can call my staff. They'll get out all the paperwork if you need it. You can fill it out online right on our form. Our forms and everything are right there online under account openings. Makes it simple. But it's going to get exciting. This could be a way, if you haven't traded before, to get your feet wet with that 110 size contract. I'm Ira Epstein. You have a good evening.